Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, daily chart. And look, it is what it is. Bears miss an opportunity on Thursday to head down and do round number 3,900, potentially below, really engage the lower Bollinger Band. They get stopped at 3,923. They take it back. They follow through Friday. They take out the 100-day, the 9-day, the 20-day, the 50-day. It was all open up above. And now they follow through into the Friday close. They head up and they've tested now the 20-day, the daily mid-band. So going back, 10 years on this thing, however long we've been doing it, one of our baseline assumptions about a market is where does any particular issue trade with respect to the Bollinger Bands. The E-mini loves to trade upper band, middle band, lower band, middle band, upper band. I'm not saying we're going to the upper band. What I am saying, because I don't do the target thing, I'm not trying to angle this for some great tweet. I'm way more concerned about what we do in the room and making handles than trying to, do, ego-based tweet nonsense, which is a lot of what goes on. It's a lot of the noise that's out there. The middle Bollinger Band is the baseline dictator of whether we are in a sell rallies or a buy dips market. So what we're getting now on a Monday is an opportunity for one side or the other to take control at the middle band. Bears hold the middle band, head back in, that's fine. Then it shows the mini wants to live between the middle band and the lower band. That keeps you in a sell rallies tape, and you start to look at a retest of the lower band. Now, if over the next 1 to 2 days, the green line there converts to support, it's going to open up some of these areas from mid-February, heading up into the 41s and potentially up into the 42s from back in very early February, late January. It is what it is. Don't have to like it. Price doesn't care if you like it or not. It is what it is. But for right now, in the moment, we go up, we traded. Your overnight high is 40.64. Your daily mid-band is 40.64. So Bears need to hold that area. Bulls need to do a little bit better. And all the way through, we'll just have to see. It's a very interesting Monday in that respect. A very interesting Monday. So, hourly chart. There's your the green line. There's your middle Bollinger Band. 20-day simple moving average. Hourly mid. The Bulls want to hold that as support. The Bears want to get underneath it. They want to get back below the monthly pivot. They want to go test the new weekly pivot down at 40.10.17 and ideally try to close below it. And I think that's something that the Bears are really going to want to do today. They can't really let this linger. They can't let some of these areas go support midweek into later, because if you get an upside catalyst out of the jobs report on Friday, then that's a whole other set of fuel to the upside. So if the Bears are going to try to stay in the conversation, they've got to hold the green line, hold 64, hold this middle band, try to work it back a little bit, and start fighting over 4,000 again. Start fighting over 4,000 again. You can't be living above 40.50. As far as the Bulls are concerned, every time we get up in this rarefied air, they don't look good. They're clearly not comfortable trading at these upper prices. The Bears can't execute on the downside prices. And it's just turned into this very large trading range, roughly between 3,900 and 4,200. 300 handle range that we've been going back and forth in a while. Both sides hate it because both sides want to take the other side and absolutely eviscerate them. It's not that kind of a market. It's just not that kind of a market. There are things going on in the world. But the things that are going on in the world have been going on in the world for a while. Whether that is geopolitical, whether that's inflation, whatever it is, there's nothing new really happening in the world. So is it all kind of priced in? Yeah, it's priced into the upside and the downside, which is why we keep banging around inside of a 300 handle range. So you can go shout at the rain all you want, whether you're a big bull or a big bear, but the reality is it's just a trading range. It really is just a trading range. Looking back at the daily chart, there's just not a whole hell of a lot happening here. We were up here, we were down here, and we're up here, and we're down here. So, you can read the tea leaves all you want, but the reality is it's just banging around between the Bollinger Bands, and it's been doing it for, going on 6 months now. Because it's digesting everything that's going on, and I don't think that price is really prepared to say that, over the course of the next long term, whether we're looking at an up market or a down market. And everybody who stayed at Holiday Inn Express has a fucking opinion, but doesn't amount to much. Neither does mine. Just it is what it is. Just understand, as traders, we are in a range. So when the market does this over the course of a couple of days, you cannot get ideological. You cannot get dug in down here and say, we need to go down. We should be going down. Well, we're not. So either buy it, get out of the way. Those are your choices. The choice is not fight it short and complain, because that's a great way to not have a trading account anymore. By the same token, when we go down, why are we going down? It's doom and gloom, blah, 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 blah. Well, either short it, get out of the way, but don't fight it long, because that's a great way not to have a trading account anymore. Go with the flow. We are ultimately in a range. The bulls are going to have their days. The bears are going to have their days. Just deal with it. Just deal with it. Everybody is very obsessed right now with picking the next long-term direction. I don't know why. I don't know why. Beyond ego, I don't know why. Just be the ball. Be the friggin' ball, and your life gets a lot easier. All right. VWAP, proprietary moving average, and the hourly mid-band are all jammed into 40.50. 40.50 is going to be a big deal today. I would expect that price to get tested off the open, and then it becomes 64, 50, 42. 64, 50, 42. That's the key battle zone as we open the day. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow.